But as I walked in, I noticed a number of things. For example, I saw an ICT lab that has a lot of computers. I left this school probably about 20 years ago, and we didn't have some of the things you have today. So things have changed, and I'm really happy to be here with you at a time like this. Tesah is happy to partner with the university at any time because learning is important for us. You can't stop learning. No matter how high you reach in life, learning doesn't stop. And knowledge is important, it's power. Without knowledge, there's very little you can achieve. So at Tesah, we always want to be part of knowledge impacting, education, and learning. So that's why it's important, and we find this function very important. One thing I also noticed is, in my time, and I was sharing with Doc and Prof, that the learning here was very rigid. It was very, you come, there are notes, you read, and then you come and reproduce. So I'm happy to see sessions like this, and I think you should take advantage of them. Sessions that make what you're learning a bit more practical. You see how it's being used in the real world, because that's where the world is going. When I was here, we used to clamor for what was called handouts. Without handouts, you can't pass. So the lecturer finishes, and then he's published some handouts. That's what you purchase, you read, and you go and reproduce in the lecture during exams, and then you get your A. But then when we go out into the real world, you find that you know the theory, but in terms of practical understanding and how to impact what you have learned, it was a bit of a challenge. So sessions like this are very important, and any opportunity we get to be able to bring you closer to the business world you are all training to be part of is important to us, and we think you should take advantage of it. Today's topic is particularly even more important because, once again, to use my experience, I was privileged to be amongst probably the very first people in Ghana to use internet, because I did an internship with one of the first internet service providers in Ghana. It was a company called Africa Online. Even then, we thought the internet was amazing. But what were we doing? Nothing much. But today, I get onto the internet and I'm lost. There's a wealth of information, of knowledge out there. We don't have to miss out. In the past, whatever you have to learn, you have to go and look for a textbook. There used to be a bookshop down the road. I don't know if it's still there. We'll go there and go and look for textbooks. You have to read. Luckily for you today, a lot of things are out on the internet. Whatever you are looking for, somebody has looked for it before. So it is there. What it means is that technology is changing so much the way we live our lives. I was reading an article a few days ago where there was a debate about whether computers have taken over the world. And a school of thought was, no, they will. The article ended by saying that those who think computers are now going to take over the world are living in ignorance, and that computers have already taken over the world. I don't know which of you, I don't know if you agree. I mean, examine your life. How many of you live a day without touching your phone? No hands. That is it. It's already taken over the world. But we are lucky. The same technology is making sure that we are not left out. So the choice is ours. Are you going to use that technology to grow and make sure that you don't miss out in the opportunities out there? Are you going to spend your time chatting on your phone, or you're going to use it to learn more? There are people who are taking advantage of what you are looking at on the internet, and they are using machine learning and AI to follow you and track your patterns. And that is why when you go and today you search for white dress, my ladies, you know, we go and search for it all the time. You search for white dress, the next time you go, the internet shows you another set of white dresses. Because somebody is using technology. So if you only spend your time using technology to chat, using technology to search for clothes, to search for how to do eyebrows and all that, it's important. We do all those things. But you need to make time for the important things and use technology to your advantage so that you are not left out. I don't want to talk plenty. The professors are here. For me, I found the topic really interesting because we do a lot of manual work to be able to invest. I've been investing for a while now, and it's a lot of work to be able to study the market, understand the market. Somebody said it's like educated chatter. You need to be able to understand, read, and through what you read and see, be able to deduce what is likely to happen in the future, because the events follow a certain pattern. So if we can use technology to do that, it makes our work easier. It makes it easier for you now to invest. So let's listen. I'm looking forward to learning. As I said, learning never stops. So I'm looking forward to this. I'm looking forward to learning and using it more in my work. So I'm going to sit and enjoy the lecture, and I hope you do too. Thank you very much.
Upon all the information you've gained from a smart woman, I was expecting even the ladies to be clapping and the men standing ovation, and you're all sitting. Anyway, so as has been mentioned, the topic is very important. What can unsupervised learning tell us about stocks listed on the Ghana Stock Exchange? Even me, I don't know. I have been doing this financial thing for a long time. I'm not copying her. As lawyers, we do that. We have to advise people on what to invest in and what not to invest in. But sometimes, we are lost ourselves. So today, it is important that we all, where's my notebook? We all have to, oh, thank God. The Nana B, that's why he's my PA, my personal PA. That's why we all have to make time and listen. And we have someone who is able. See, in Ghana, if he were to be speaking on radio, they will call him an expert. But when he is here, we call him a professor. I'm sure you understand. Good. So we have our able speaker, Professor Elikplimi Agbloyor. I hope I got it right. I tried. You will not clap for me. Do you know how hard it is for people from where I come from to mention things with L and R and all that? We've tried. So he is going to give us a detailed analysis of the topic. And after that, we would have questions and answers. So without much ado, let's give a hand for Prof as he comes to explain to us the topic for today.
Okay, good morning, and thank you for the kind introduction. And also good morning to those who are listening to us online. I'm excited to be here today to present this very interesting research that I did on using unsupervised learning to understand stocks listed on the Ghana Stock Exchange. Now, one of my friends saw the title and said, this itself is a topic we need to discuss. Okay, so I use unsupervised learning, and unsupervised learning is a type of machine learning. So when we talk about machine learning, there are three main types of machine learning. You have supervised learning, unsupervised learning, and also what we call reinforcement learning. Okay, with unsupervised learning, we don't have a target class. What I mean by that is that there's no dependent variable that we are trying to explain. Okay, so we give the data to the algorithm, and then the algorithm itself tries to make meaning of the data. Okay, so there's no supervision, to put it simply. If you compare that to supervised learning, in supervised learning, there's something that we are trying to explain. Okay, so for example, I did some research on what machine learning can tell us about why countries go to the IMF. Okay, that is an application of supervised learning. In particular, in that research, we use classification methods. Okay, so the dependent variable was that we are trying to understand whether a country will go to the IMF or not. Okay, here we don't have a target class. Going to the IMF or not is a target class, 1 or 0. Okay, that's your, if you like, dependent variable. In this case, we don't have a dependent variable per se. The algorithm looks at the data and then groups the companies into what we call clusters. So I'll explain that a bit more when we go along. Okay, so like I said earlier, unsupervised learning is a type of, okay, it's a type of machine learning. Okay, and in this seminar work that I'm going to present, I'll explain how we use it to explain the kind of stocks and the characteristics of those stocks listed on the GSE. Also, I forgot to mention that this event is being run by Tesah Capital, and I chair the research committee of Tesah Capital. So that's part of our research output. Okay, we want the research to be practical and relevant to the industry. Okay, now, why do we want to understand the characteristics of stocks listed on the GSE? Okay, for investors, it is important to construct what? Their portfolios. Okay, and you would, some of you may know, let me say you would know. Some of you may know that when you have stocks that are highly correlated, you cannot form a good portfolio. Okay, because the high correlation leads to high risk, because the stocks move in the same direction. Okay, so you want to be able to have stocks that have different characteristics, i.e. you want to be able to have stocks that are not highly correlated, and if you're able to find stocks like that, you can create a good portfolio. Okay, if you're able to find stocks like that, you can create a good portfolio. So that's the essence of what we are trying to do. We want to understand the companies listed on the GSE, and then we'll put them into what we call clusters. And we expect that the correlation between the stocks and the clusters will not be very high. And that is good for portfolio formation or portfolio management. Okay. So we do some exploratory, what we call EDA. Okay, in machine learning, before you do your analysis, you have to do what we call exploratory data analysis. You want to understand the data better. You want to be able to know the mean, median, the standard deviation, etc. Okay, so we do some EDA or exploratory data analysis before we do the actual machine learning. Okay, so how many companies did we have? We had 16 companies in our sample. These companies were in 7 different sectors, okay, with the financial sector being the most popular sector. And then we also have 7 unique subsectors, with the banking sector being the most popular subsector. Okay, now let's look at the variables that we use. So the first one is the stock price. Okay, so we wanted to understand the stock prices of the companies listed on the exchange. Now, this data was from January 2022 to March 2022. Okay, so what you will notice is that it has what we call a right skew. So the mean stock price was 4.8. So of all the companies listed on the GSE, the mean price was, or the average, okay, the average price was 4.80 Ghana cedis, and the median price was how much? 2.65. Okay, 2.625. Okay, so that tells you that this variable exhibits a right skew because the mean is higher than what? The median. And you can also see it here. Okay, that you have companies with a very big stock price, and that gives you the right skew. Okay, so basically the mean price was about 4 cedis, the median price was about 2.6 cedis. Stanchart had the highest price. How much? About 20 cedis. Okay, so that's the stock price variable. Then you have the year-to-date return, or the yield-to-date, which represents the returns on the GSE up till 31st March 2022. Okay, so if you look at the mean was how much? Minus 1.79%. And that confirms what we know already, that this year the stock market has been struggling based on a number of issues, including the current economic challenges. Okay, so we had a negative overall return on the exchange. Some companies did well. Okay, so Enterprise, Guinness, SIC were the only companies that had positive returns. Some companies had very huge negative returns. So for example, you will see that Access Bank and Farm Milk, they lost 39% and 25% of their value, respectively. Okay, so that's the year-to-date return. Then we also looked at the volatility of the companies listed on the stock exchange. When we talk about volatility, we are referring to uncertainty. Okay, and we measure volatility using the standard deviation. Okay, so basically we are looking at the dispersion of stock prices from the mean return. The average volatility was how much? 11.1%. That's the average standard deviation, the mean. Okay, and the median was how much? 2.01%. So again, that tells you that we have a right-skewed distribution. What I mean by that is that the mean is higher than, so you will see, the mean is higher than what? The median. Okay, and when the mean is higher than the median, what it tells you is that you have companies with very high volatility that push up the mean returns, or the mean indicator. Emmanuel, am I doing well breaking it down? Okay, so if your mean is higher than your median, then you have a right skew. And when the mean is higher than the median, it tells you that there are companies in the data that have high values that push up your mean. Okay, and you will see that will give you a right skewed distribution. Okay, so if your mean is higher than your median, you have a right skewed. The opposite will give you left skewed distributions. Okay, what about the ROE? Those on the stock exchange or investors or traders look at the ROE a lot. ROE is return on what? Equity. Okay, that's the return on shareholders' capital. This is the accounting return. Okay, what was the median and mean ROE? So the mean ROE was 22.8%, and the median was how much? 19.6%. Okay, so that's your return on equity. Companies like Ben's Oil Palm Plantation had high, EcoBank, Farm Milk, they had high ROEs. Okay, Farm Milk, on the other hand, was the only company with a negative return on equity. Okay, so if you look at the ROE, in an accounting sense, some of the companies were doing well. Okay, because an ROE of 22% is not bad. Okay, let's look at the cash ratio. Okay, so the cash ratio, how much cash do these companies have on hand? Here we are looking at their cash reserves compared to their liabilities. Okay, so if you look at the cash ratio, the mean was about how much? 20%. Okay, and the median cash ratio was how much? 80%. So again, we have a slightly right-skewed distribution. Okay, you will see that some of the companies are outliers. Can you see that here? You have two outliers. You have two dots here. So this is these companies fall outside your range, okay, the interquartile range. And we refer to them as outliers. Okay, so if you look at these companies, you had Benzo and Stanchart. Okay, they had very high cash ratios. Okay, so they were outliers in the data. Okay, let's look at the net cash flow. Here we are looking at the actual cash that they have on hand. Okay, if you look at the net cash flow, the mean was how much? 819 million, and the median was how much? 580 million. So what distribution we have? Left or right? Right skewed. Okay, so again, you can see that from here. When we say right skewed, you see it doesn't follow the normal distribution, bell shape. Okay, it doesn't follow the bell shape. As you can see, you have more data or mass on the right. Okay, so that's a right skewed distribution. Okay, let's look at the net income. And a lot of analysts followed companies' net income. Okay, what was the profitability of the companies that were listed on the exchange? So you have a mean net income of how much? 330 million, and a median of how much? 119 million. So again, what distribution do we have? It's a right skew distribution. At least you learned that from the seminar today. The differences between a right skewed distribution and a left skewed distribution. Okay, but there was an outlier, and again, you will see that here. Okay, if you look at your normal, this is your box plot. Okay, you can see that there's a very huge outlier. Okay, that doesn't fall within the normal range of the data. Okay, and this company is which company? MTN. Okay, its profitability is way higher than any company listed on the stock exchange. Okay, so MTN was an outlier in terms of its profitability. Then in terms of earnings per share, which is another indicator that analysts look a lot at. So earnings per share, P/E ratio, analysts work a lot with these indicators. So the main earnings per share was how much? 0.93. Okay, so close to 1 CD. And the median was how much? 0.35. So again, we have a right skewed distribution. And Farm Milk had the lowest earnings per share, while Stanchart had what? The highest earnings per share. Okay, so all we are doing as of now is that we are trying to understand what? The data. Okay, we haven't done any analysis yet. We are trying to understand the data to be sure that the data makes sense. If you have problems with the data, you would be able to tell that from your exploratory data analysis. Okay, you'll be able to tell that from your exploratory data analysis. Okay, let's move on. P/E ratio. So in terms of the P/E ratio, the mean P/E ratio was 3.88, whilst the median was how much? 4.40. Okay, so the mean was 3.88, the median was 4.40. What kind of distribution will we have here? Left skew. Okay, again, you can see that from the data. Okay, there's more mass to the left compared to what? To the right. Okay, so there's a left skew distribution. Farm Milk, Access, SIC had the lowest P/E ratios, and interestingly, ADB had the highest what? Price earnings ratio. What does the P/E ratio tell you? Anybody? Boyson, what does the P/E ratio tell you? Okay, so when the P/E ratio is high, what will you say about the company? And when the P/E ratio is low, what would you say? Mm-hmm. Okay, so Virginia, you're on the market. What will you say about the P/E ratio? Companies, I'm putting you on the spot. Okay, so when the P/E ratio is high, it means that investors are paying a high price per CD of what? Earnings. Okay, they are paying a high price per CD of what? Earnings. Okay, so for every CD of earnings, you may have companies that have 100. Okay, so 100 per CD of earnings. It means that investors really want to buy the company. Okay, they are really willing to pay a lot for the company. Usually these companies are referred to as growth firms. Okay, because of their growth. So why are investors paying a high price for these companies? It's because they expect the companies to do what? To grow. Okay, so typically the benchmark is that if your P/E ratio is above 10, we classify as a growth firm. If your P/E ratio is below 10, they are classified as a value firm. Okay, so based on the P/E ratio, you will see that the P/E ratio was a bit not too high. Okay, about 3.88 on the average. Let's look at the number of years of the companies listed on the exchange. Okay, we know that our stock exchange was established when? So this is a spot quiz. When was the GSC? Yes, I have my contestant here. Sorry, the name again. Insha. When was the Ghana Stock Exchange established? You can try, yeah. 1996. No. Who wants to try? I will. 1916. Ghana Stock Exchange. Okay, anybody else? 1993 is closer. We are getting closer. So 1991. Okay, so 1990, if you ask the GSC guys, 1990, 1991. Okay, the actual trading, I believe, started in 1991, but the processes started in 1990. Okay, so the average company listed on the GSC had been listed for how many years? If you look at it, it's just about 20 years. Okay, so the average company had been listed on the exchange for about how many years? 20 years. Interestingly, the youngest company was what? MTN. Okay, but there are older companies like Stanchart, like Fan Milk, like Enterprise, like Societe Generale, Total, etc. Okay, these are older companies, so companies that were listed for a longer time. Okay, so the youngest company was MTN. Also, we were interested in the years, how long these companies had been established. Okay, the number of years listed is different from what? The number of years the company has actually been in existence. Okay, so if you look at the average company, it was about how many years? About 60 years. Okay, so the average company had been in existence for about 60 years. And again, the youngest companies were Access Bank and what? MTN. Okay. Now, something that people in the industry are very much interested in is the liquidity of the market. Okay, how easily can you what? Sell your shares? And that's a very important indicator of the development of every or any stock exchange. And that also encourages people to trade on the stock exchange. So if you want to sell shares and it's difficult to sell, next time you may not want to buy shares on the exchange. Okay, so the value traded is an indicator of how easily you can sell or transfer your shares. Okay, so the average value traded was about how much? 238. Okay, so I think there's a typo here. I think it's about 2.3 million. Okay, and the median was about how much? 117,000. Okay, so in terms of the companies that are very liquid, okay, you have companies like Cal Bank, like EcoBank, like Enterprise, like Farm Milk, like GCB, like Gold, like Stanchart, like Total, and like MTN. The least liquid stocks were ADB, Republic Bank, and what? SIT. Okay, so again, let me mention that we didn't use all the companies listed on the exchange. We used how many companies, if you remember? 16. Okay, so we used 16 of the most actively traded stocks on the exchange. Okay, so not all the companies were used in the study. Also, investors are interested in what? The dividend yield. Okay, even though that is not the only return you should look at. Okay, because typically I tell people that the dividend yield is a small component of what? The total return. Okay, most of the return will come from capital what? Appreciation. But a lot of investors are still interested in how much dividends the company is going to pay them. Okay, so with the dividend yield, you compare the dividend per share to what? Who can tell me? I see some of my MPhil, PhD, Onassis. You compare the dividend per share to what? Dividend yield. Okay, yes. Derek, our excellent, they won the Southeastern Zonal Championship, the Gavrik Business Competition. They did very well. Yeah, Derek. So dividend yield. Excellent. Okay, so it's a dividend per share expressed as a ratio of what? The price per share. So we are comparing the amount of dividend paid to the price of the company's what? Stock. Okay, we are comparing the dividend paid to the price of the company's stock. So the average dividend yield was how much? 5.25%. Okay, that was the mean BY. And the median was how much? 3.8%. So again, you will see that we have what? A right-skewed distribution. Okay, so Cal Bank and SIC had the highest what? Dividend yield. And the companies with the lowest they actually didn't pay dividends the previous year. Okay, so remember that the dividends, this was for 2021. Okay, so Access Bank, ADB, Fan Milk, Republic Bank, they didn't pay any dividends. The dividends was 0. Now, is that a good or bad thing if a company pays dividends? Onassis, I'll come back to you. Because we taught you dividend policy. Is it a good or bad thing if a company pays dividends or doesn't pay dividends? So is it good or bad? Or let me put it this way, is it always bad if a company doesn't pay dividends? Why not? Why not? What's the reason? Okay, again, Derek. Contestant number 1.
Well, it's not always bad because companies have dividend policies. Maybe they have a constant payout ratio or they have a residual policy. So maybe the company wants to undertake an investment with positive NPVs and they have insufficient cash flows and money from outside, maybe from floating on shares or from bonds, is hard to come by. So they'll rely on their internal funds too. And in future, the share price of the company will also appreciate and the investors will get equal return as if they receive the dividend earlier.
Okay, 100%. Okay, so it's not always a bad thing. Companies, indeed, if you look at some of the big companies, okay, when they are growing, they decide not to pay dividends. So Google and a number of top companies, okay, in the initial years when they are growing, they will rather retain the earnings and invest and generate positive NPV so that the stock price will do what? Will grow. If you remember, we said that distribution occurs in different forms. It could be in the form of what? Dividends or capital gains. So rather than pay dividends and then constraining future growth, they decide to retain the earnings, invest in the firm, and rather grow the company's what? Stock price. Okay, so it's not always a bad thing if a company doesn't pay what? Dividends. But of course, there's also what we call the clientele effect. Okay, there are companies that pay dividends to attract certain investors. Okay, investors like people who are on retirement, who need a regular what? Cash flow. Okay, so that's the clientele effect. Okay, so we are getting to the interesting part. So market cap, if you look at the market cap, again, there's a huge outlier. Which company is this? MTN. Okay, its market cap dwarfs a lot of the companies listed on the GSE. Okay, so it's one of the largest companies listed on the GSE. Companies, again, like ADB, EcoBank, GCB, Stanchart, have a market cap in excess of what? 1 billion cedis. Okay, so these are the really huge companies listed on the exchange. SIC had what? The lowest market capitalization. Okay, SIC had the lowest market cap. Now let's look at the sectors, okay, the prominent sectors listed on the GSE based on the 16 companies. You will see that the most popular sector was what? The financial sector. Okay. Again, in terms of the subsectors, you see that the most popular subsector was what? The banking industry. Okay. The most popular subsector was the banking industry. Now, in terms of the sectors and the price change, okay, which sectors had the highest or lowest price change? Okay, so if you look at it for up to 31st March, this was the agricultural sector. Okay, it had the highest price drop. Okay, so this year most of the companies have not been doing very well. And the agricultural sector had the highest price drop, followed by, myself I can't see. Okay, so you have, so this is financials, this is the energy sector, this is the telecom. Give me a second, let me cross-check from here. Some of us wear glasses, so that is the industrial sector. Okay, so that was the industrial sector. Now let's look at the sectors and then their cash flows. Okay, because again, you want to understand which sectors have liquidity in terms of cash. Okay, so you will see that the sector with the highest cash flow was which one? The agri sector, followed by what? Financials. Okay, the sector with the lowest cash flow was what? The telecommunications sector. Okay, now let's look at the sectors and their price earnings ratio. So this one is the industrial sector. Okay, had a negative PE ratio. Then the sector with the highest PE ratio was which one? Sorry. That's the telecommunications sector. And which company is that? MTN. Okay, so MTN had the highest PE ratio. Okay, let's look at which sector is very volatile. Okay, and again, remember that volatility was measured using a standard deviation. Okay, so in terms of the volatility of the sectors, again, the agri sector had the highest what? Volatility. Okay, whilst the telecom sector had what? The lowest volatility or standard deviation. Okay, now which sector is the most liquid sector? Okay, so in terms of liquidity, again, you see that it's clear. It's the telecom sector, and this will be what? MTN. Is that okay? Again, which sector is the most profitable? Again, it was what? MTN. Okay, followed by the financial sector. Okay, which sector had the biggest market capitalization? That was, again, MTN. We saw that earlier. Okay, and which sector had the highest dividend yield? The financial sector. Okay, and the lowest dividend yield was, again, I can't see. Okay, so that's industrials. Okay, it had the lowest dividend yield. Okay, so let's look at this heat map gives you the correlations between the different variables. Okay, so it allows you to understand which variables are highly correlated and which variables exhibit what? A low correlation. Okay, so I won't say much about that. Maybe you will see that net income is highly correlated with what? Liquidity measures. So companies that are profitable tend to be what? Liquid. Okay, investors trade, that's the implication. Investors like to trade what? Profitable companies, and it makes sense. Okay, so there's a high correlation between income and profitability. Again, there's a high correlation between market capitalization and net income. Again, it makes sense. The bigger companies tend to be what? More profitable. Okay, that's why we have a high correlation between market cap and net income. Okay, now let's go to the main business for today. So now that we've understood the data, we have looked at the correlation, we finished with our exploratory data analysis. Now we want to go into the real work. Okay, so here we are going to now understand how we used unsupervised learning to group what? The companies. In terms of unsupervised learning, there are two popular techniques that are used by data scientists. One is what we call the K-means clustering. Okay, the one is called the K-means clustering. The second is what we call the hierarchical clustering. Okay, so K-means clustering and hierarchical mode clustering. Now, in terms of K-mean clustering, what does it do? So let me also mention that I'm a mom and pop word programmer. Okay, so I can program, I program well, but I haven't done a lot of projects. Okay, so I'm also I don't know, I'm also learning. Okay, so I'm also learning. I'm a good programmer, but I haven't done a lot of word projects. Well, that's one of the projects I decided to do, to apply. And that is how we all learn and grow. Okay, if you want to become a good data scientist, you actually have to do projects. Okay, so that you get your hands dirty, you understand, you get used to the coding. It's like a language. Okay, programming is like a language. If you don't speak a language, you tend to do what? Forget. Okay, if you don't speak a language, often you tend to do what? Forget. Okay, so those of you who want to go into data science, which is the future, okay, it's applicable to a lot of fields, including business, and you will see that even in the business school, people are asking, we are introducing new programs. Okay, the OMIS department is introducing an MSc in business analytics. In the finance department, we are thinking about an MSc in financial technology. Okay, so it's a future, and you want to be able to understand data science and be able to apply it in your chosen field. Okay, I tell people that if you don't go to a prophet, you don't need a prophet. Okay, if you want to understand what will happen in the future, rely on data. Okay, because we can use data to predict the future. A lot of times with a very high level of what? Accuracy. Okay, a lot of times with a very high level of what? Accuracy. And at Tesah Capital, we are working on a lot of models. One of the models we are currently working on is using machine learning to predict the monetary policy rate. Okay, we'll talk more about that. Okay, so when we talk about K-means clustering, what it does is that, so I told you that here we are using unsupervised learning. Okay, so what the algorithm does is that first of all, it creates what we call centroids. Okay, so it creates what we call centroids, and then allocates points in the data to the centroids based on the distance from the centroid. Sounds a bit too technical. I can see from I can see from your expressions. So let me try and break it down. Okay, basically what the algorithm is doing is that it's trying to group companies that are similar together. Okay, it's trying to group companies that are similar together. It does so by computing a distance. Okay, so people with a lower distance are more similar. Let me give you an example. Let's say that, so for example, another application that may make it easier to understand is that a supermarket can use unsupervised learning to understand people who come and shop. Okay, so when I go to the, let me say, Accra Mall, and I buy something worth, I don't know which values to use. Let me say 2,000 cedis. Okay, when I go, I buy certain kinds of products. Okay, my income, assuming that the store had my income is, let's say, this amount. Okay, somebody else comes to the shop. Maybe they don't come very often, but they have very high income. When they come, they buy high value items. Are we following? So you have two people. One comes, income is not very high. When they come, they buy vegetables. What else would they buy? Meat, Milo. Okay. Another person comes, the store has their data. High value clients, they earn a lot. When they come, what do they buy? They buy things like a home theater system or a TV, a curved TV. Okay, so if you compute the distance, you see that one person is very different from the other. Okay, so that's how the algorithm works. It will compute the distances based on all the variables in the data set. So for example, the distance between my income and the other person's income. The distance between what we shop, the value of our shopping. Okay, so those who are similar will be grouped together. For example, Inshira and you will likely be grouped together because you are similar. Okay, you are students. When you go to the shop, you buy similar items. Okay, maybe myself and Eugenia will be grouped separately because when we go to the shop, we buy different items. So that's how the algorithm works. When people are closer together in terms of their distance, we put them in one cluster. Okay, and when people are dissimilar, they go into what? another cluster. So I won't talk about centroids. Okay, all I'll say is that those who are similar are put in one cluster, and those that are dissimilar are also put in what? One cluster. That's what the algorithm is doing. Okay, it's putting the companies into clusters based on the computed what? Distance. Okay, based on the computed distance. So I won't say, I think I'll skip a lot of the technical things. Okay, so basically, after doing the k-means clustering, what were the clusters we obtained? Okay, so first cluster, I think the projection is not very clear. Okay, so the first cluster is, just a moment. Okay, so you have companies like EcoBank, okay, StanChart, and GCB. Okay, so this was the first cluster that the algorithm gave us. So EcoBank, StanChart, and GCB. What were the characteristics of these companies? So one, they had the highest prices, they had the lowest what? Volatility, okay, in terms of the standard deviation. They had the highest what? Net cash flows, they had the highest earnings per share, they had the highest book value per share, they were the oldest what? Companies, and they had the highest dividend what? Yield. Okay, so these companies, these were their characteristics. So what did I call them? I called them mature, stable, and what? Dividend paying companies. Okay, so if you are investing and you want a mature company, a company that has very low volatility in terms of the fluctuation in its stock price, and you want some decent dividends, which companies should you invest in? EcoBank, GCB, and StanChart. Okay, this is our first cluster. Now let's go to the second cluster. So second cluster, this I call them low profitability companies. What were their characteristics and which companies were these? Okay, so the companies were actually a lot. So ADB, Car Bank, Enterprise, Fan Milk, Guinness, Guam, Republic, SIC, Societe Generale, and Total. Okay, so these companies were like, let me say low profitability companies. Like I won't say much more. Okay, but most of the companies were in actually this cluster. Okay, so their characteristics were that they had the highest price change, they had the highest yield to date returns, okay, but they had the lowest P ratio, they had the lowest net income. Okay, so again, net income is profitability, P ratio, ROE is profitability, and they had the lowest what? Book values, okay, book income. Okay, so basically I call these companies the low profitability companies. Okay, so these were companies like ADB, Carl, etc. Now, let's go to the third cluster. The algorithm put MTN in a very word. It's different. Okay, why? They had what? We saw it earlier. Had the highest market cap, had the highest liquidity. Okay, was very profitable. So MTN is very different from most of the companies listed on what? The stock exchange. Okay, so this was also in a different cluster. Now let's look at the final cluster based on the K-means clustering. So we're given here Benzo Oil Palm Plantation and Access Bank. Okay, what were their characteristics? I call them underperforming, high risk, and low dividend firms. Okay, so in terms of their characteristics, just a moment. They had the lowest price change. Okay, they had the lowest yield to date return. They had the highest volatility. Okay, in terms of the variation in their stock price. They had the highest cash ratio. Okay, they also had the lowest net cash flow in terms of the actual size of the cash. They had the lowest shares outstanding. They had the lowest price to book ratio. They had the lowest volume and value traded. So these companies were also not very liquid. Okay, they had the lowest volume and value traded, and they paid very low dividends. Okay, so these were what I called underperforming, high risk, and low dividend paying firms. Actually, also low liquidity firms. Okay, they don't have a lot of what? Liquidity or trading. Okay, so basically these are the clusters. Again, this one I'll skip. Okay, but you had a full presentation. If you want to understand for each cluster and for each variable what goes in there, you can tell from here. This is a visual summary of the various clusters. Okay, so this is the K-means clustering. Okay, like I mentioned earlier, there are two popular approaches. K-means and, oh, it's already here. The hierarchical word, clustering. Okay, so after finishing the K-means clustering, we decided to use the hierarchical clustering as well to see if we get similar word clusters. Okay, so the K-means clustering is different from the hierarchical clustering. Hierarchical clustering does not use centroids. Okay, it doesn't create a center point. It computes the distance between each pair of variables. Okay, so that's the key difference between K-means and hierarchical clustering. Again, because it computes pairwise distances, it's not ideal for large data sets. Okay, it's ideal for what? Very small data sets. Okay, and this data set wasn't very huge. Okay, so we could apply the hierarchical clustering. Now, so that's what the hierarchical clustering looks like. So just a moment, it's not very clear. So where is the, okay, so based on the statistics that I obtained, I decided to use, there are various kinds of, so you look at the dendrogram. Okay, the dendrogram will tell you which companies are in which cluster. And there are different dendrograms. Okay, so I decided to use the world dendrogram. If you look at the world dendrogram, if I cut off from 0.9, this is one cluster. Okay, so there is one cluster. If I cut off here, this is also another word. Cluster, group of companies. Okay, if I cut off here, this is another word. Cluster. Are you following? So imagine that we draw a horizontal line. Okay, so if we draw a horizontal line here, what does it cut? When it cuts here, there's one cluster. Okay, one group of, let me say, companies. When we cut off, so at 0.9, when I cut off here, there's another group. You see this 1, 2, 3. Okay, that's another cluster. And then when we come here, these companies also represent what? Here, another cluster. Okay, so again, when I use the hierarchical clustering, I went for 4 clusters. So again, let's look at the characteristics of these clusters. Okay, interestingly, they were very similar. Okay, so again, you will see, if you remember, we had Access Bank and what? Do you remember? And Ben, so what did we call them? Okay, but hierarchical clustering added Fan Milk, okay, to this group. Then if you look at cluster 2, again, similar companies. If you remember, ADB, Carbank, Enterprise, Guinness, Guel, okay, very similar companies. Then cluster 3, here, if you remember, mature, stable, dividend-paying companies. So EcoBank, GCB, Stanchart. Okay, another separate cluster. Then cluster 4, which one? MTN. Again, on its own. Okay, so what this tells us is that the clustering was stable in the sense that the different approaches give us what? Very similar what? Clusters or groups of what? Companies. Okay, the different hierarchical clustering, K-means clustering, give us very similar companies in the what? In the clusters. Which tells us that the clustering analysis is what? Is stable. Is that okay? Okay, so same thing that we've done here. And there's a visual summary for the hierarchical clustering. Okay, so basically what we did was that we used unsupervised learning, in particular, which approaches? Inshira? and hierarchical clustering. Okay, so in particular, we use the K-means clustering and hierarchical clustering. We obtained 4 distinct clusters of companies listed on the GSE. So we'll go around. What were the clusters? Done. So just give me one cluster. Okay. And then
So we have the underperforming, high risk, low dividend paying companies.
okay, so that's one unique cluster. Asantua. What was another cluster that we found? Which companies were in the cluster and what were their characteristics?
Okay, so we found growth giants, which is MTN was part of the cluster.
Okay, so unique on its own. Okay, who wants to tell us the third cluster? Derek. He's at the back. All the questions, so. Eugenia, you should consider him for an internship. Very smart guy.
We have mature, stable, and dividend-paying firms, and it includes Stanchart, EcoBank, then GCB.
GCB.
Yes,
Okay,
yes.
you have a photographic memory. Okay, so mature, stable, dividend-paying company. So GCB, EcoBank, Stanchart. We are left with one last cluster. Which one is that? One last cluster. Which one is that? We've talked about 3, right? Okay, Insha. Okay, and what kind of companies do we have? Let me
The
help
low
you.
profitability cluster, and it has Go, Cowbank, ADB, SIC.
Among others. Okay, so these were the 4 distinct clusters. And again, like I mentioned from the beginning, you want to be able to understand the companies that are listed in terms of the characteristics or attributes that they have that can help you to make an investment decision. Okay, so for example, if you are looking for companies that are mature, stable, high dividend paying, it can help you to decide which companies to invest in. Again, because the companies are in different categories, okay, we have made a point that they would exhibit low what? Correlation. They're not similar, they are distinct. Okay, they will exhibit low correlation, and that can help you in what? Our portfolio construction. Okay, because when you are constructing a portfolio, you don't want companies that are highly correlated. Why? Sometimes it helps if they have high correlation, in the sense that when you win big. Okay, so if A goes up, B goes up, that day is a lottery for you. You've won the lottery. Okay, but remember that we don't always win the lottery. And indeed, there are many days where we lose a lottery. Okay, and on those days, when the companies fall, they are going to fall together. And imagine that you're a pension fund. You've invested in companies that are very highly correlated, and the market tanks, and all your shares are reporting what? Negative returns. That's not good for your investors. Okay, so in terms of portfolio construction, we prefer companies that are not very highly correlated. That helps us to diversify what? Our portfolio. Okay, so this approach, by being able to identify distinct clusters of companies that are listed, that can help companies or investors to construct well-diversified portfolios. Okay, that can help companies to construct well-diversified portfolios. Now, the final point I'll make is that this clustering is not cast in stone. Okay, this clustering is at a point in time. Okay, so what we are actually going to do at Tesah Capital is that we are going to be performing this analysis frequently. Okay, so continuously, when things change in the market, companies may move from one cluster into what? Another cluster. Okay, so when I'm CEO, I think that that's something that would help investors, okay, to be able to understand the companies listed, and that's something we'll be publishing regularly. Okay, that's something we'll be publishing regularly. So on that note, I'll bring the formal presentation to an end, and we can go into the Q&A session.
Thank you, Prof. At least, if for nothing at all, at least I know where to invest my money, which companies I can invest. And now my app on my phone knows where to do all the clustering and all those things. Anyway, so if you have any questions, just draw my attention. We are picking 4 questions. Prof would answer, and then we'll take another 4.
Please, I have 2 questions. I hope I can ask them. Okay. I'm quite unfamiliar with the unsupervised learning, but I don't know if the data set were just thrown in, unlike the other paper, Elsoni et al., where they use the deep learning models for predicting financial distress. The second phase of their methodology actually took out the outliers. They did major data cleaning, and their data set was larger. I don't know if something like that can be applied to this, or is just left like that, and what will be the impact of that? So that's my first question. The second one is there any reason for the choice of variables, and do we have to worry about how parsimonious the data is, or so far as it's data and it's unsupervised, we just throw all of them in?
Okay, so thank you for the question. So the first question is that in unsupervised learning, outliers is not a big problem. Okay, so usually you don't take out the outliers. Okay, so that's the first part of the question. So you don't take out, so I didn't take out outliers. Okay, actually in unsupervised learning, you also want to understand the outliers. Okay, so typically, unlike supervised learning where you want to do a lot of data cleaning, we don't do that here in unsupervised learning. In terms of the variables, you use as many as you can get, and those that are relevant. Okay, so if you look at the choice of variables, we looked at liquidity variables, profitability variables, volatility measures, cash flow measures, the dividend payout, the history of the firms, how long they've been in existence, etc. Okay, so we think that these are variables that influence investment decisions. Okay, of course, if we had more data on other variables, we could include them. Yeah.
Other questions?
You have to ask questions. So.
Please, when you are asking, kindly stand up so that your friends will see that you're asking questions. Because the cameras are here. So, yes.
Okay, so my question is not that much. It's just pertaining to the sample size. I just want to ask how reliable is the research based on the sample size?
Okay, so is Emmanuel here? Or not yet? Emmanuel Ayim. Okay, so the stocks that we monitor, or you want to say something? You missed the question. Okay, so he's saying, why did we use 16 companies and not all the companies listed on the GNC? Or I should answer. Exactly. Okay, not all of them are active. And indeed, for our Tesah index, we don't use, we have an index that monitors the performance of the market. We don't use other companies. Okay, we just use about these 16 companies to monitor the performance of the market. Okay. The reason is that some of the companies don't trade frequently. Okay, so it doesn't help you if you include them in your index. So that explains why we didn't include all the over 30 companies that are on the exchange. Yeah. I think there's another hand. Yeah.
So like I said, you stand up so that your friends can see you.
Adam Lawrence. You spoke about MTMB.
Which class are you? Are you in my class? Or?
No.
Okay. Which level? Which class?
400.
Level 400. Okay.
You spoke about MTMB, the market giant. And looking at the current state right now, do you think it's advisable to put some coins in there?
Okay, so I'll give you a very good political answer, which I always give. You know the answer, right? Or you don't? Dan, you know the answer. So that's tantamount to offering financial advice. Exactly. Which is payable, like Adam said. But even more importantly, you don't just give investment advice. Okay, it depends on the investor. Okay, what is the investor's age? What is their risk tolerance? How long do they want to invest? Okay, each investor is unique, different. An investment that will work for me will not work for you. Or that will work for her may not work for you. So consequently, I'm reluctant to provide any advice in that regard. What I will say is that if you want to invest, speak to a financial advisor, okay? Or speak to any of the licensed fund managers in Ghana. They'll give you good advice. And since we are at a Tesah event, you can speak to, we have reps here, okay? You can speak to them. They'll give you very good investment advice. I hope that answers your question.
I see Prof issuing caveats here. Buyer beware. He doesn't want to be in trouble.
And indeed, I don't hold an investment advisor's license. So if I do that, I'll put myself into legal problems.
Academics.
Thank you. Prof, I also have two questions. From the analysis, the ADB showed high P ratio. That means that the market overvalued the firm. But then it was also part of the low traded firms. So I don't know if there's a reason why the investors highly value the firm, but it's least traded on the market. And the second question is that...
Okay, let me take the first one so I don't miss. Okay. So, well, in our market, not everything is as you may expect it to be. Okay, particularly, and I'm being careful how I choose my words. Okay, particularly, the market is not as efficient as it should be. Okay, I want to talk about informational efficiency. You expect the market to reflect what is going around. Okay, economic news, political news, etc. Sometimes it's not always the case in our market. Again, one of the reasons for that is that in our market we have the market is not very liquid in terms of trading. Okay, elsewhere stock prices move a lot because you have many people trading, many people following the stock, many people analyzing the stock. Okay, it's not the case here. Okay, elsewhere sometimes you place a trade within seconds, it's been picked. Okay, seconds. So by the time you blink, somebody has actually picked the trade. Here it's a bit different. Okay, and that may explain why you don't see that kind of correlation. Stock may be overvalued, but if people are not selling, the price will not change. Okay, can I take the second question?
Thank you.
Yeah.
The second question has to do with AGA, that is Anglo Gold Ashanti, and it's one of the entrenched companies on the market. But then I do not get any information on them because their price is also very high on the market.
Okay, so it's part of, so in constructing, I think I heard, you want to answer? Okay, so in constructing an index, sometimes you take out companies that have dual listings. Okay, so companies like Tallow, Anglo Gold, Ashanti, we didn't include them in the analysis. Yeah. Okay, more questions. Dual listing is listed on more than one stock exchange. Okay, so I think Tyler is listed here, and then is it in Canada? Yeah, and then Anglo Gold also has multiple listings.
I realized Prof was trying to water down some things. Our market is based on hearsay. Today, the stock will go up and everyone moves to that side. That is basically how our market works. And that is why even our inflation is unpredictable. I know Prof wants to water it down, but we say it as it is. Hearsay market. So if you want to invest in a market like that, you're always very cautious as to what you want to do. Any other questions? You think I only know law? I know my friends. Any questions? Okay, I guess the presentation was well served and well received, because I can see all their faces bright. Knowledge accepted. So I guess we can go on and thank Prof for a wonderful presentation. And like I have said, if for nothing at all, I know where to invest. And now I can do my trading on my app, understanding all that goes on. Because sometimes I only do it because I want to take risk. Or at least I understand something now, so I know what to do. So since you've heard about how all these things move on the market and all that, and you know we are being sponsored by Tesah, obviously they would have to tell us what they do and what would interest us, so that we can also, by virtue of the small that we've listened to, we can make informed choices. So I would like to call a rep from Tesah to come and give us a brief talk about what they do, so that we can all learn.
Before my colleague takes the mic, I beg to differ. Doc made a comment. He said our market is what? Hearsay market. I would say the market has advanced. It's made progress. It's not totally hearsay now. I was telling my colleague as I was listening to Doc that some of these analyses, we are doing it, except that we are probably not using some of the tools I have learned today. Tesah is trying to use some of these, but in the past, we have done this. We are probably doing it manually. So we group companies, we look at the data, but it's all very manual. So I beg to differ. Yes, our market is not as responsive as some of the markets, the international markets, but there's been progress. There's a lot of analysis that is done, and a lot of people have made a lot of money on the Ghana Stock Exchange by, as Doc said, looking at past information, looking at performance of companies, and predicting what is likely to happen. People have purchased stocks and they have made quite a bit of money doing this. And that's why I said, now that you have the technological tools that you can use and take advantage of, it makes your ability to predict the market easier than it has been in the past. And that's why the international markets respond so quickly. Because by the time the information hits the market, somebody has all their models ready already. They are just plugging in the figures and they can quickly take a decision. So these topics like these are very important, and I think you should take them seriously. Thank you so much.
I shall rest my case after the presentation. I'll just make one comment and we'll close.
Good to see all of you. I think, like my boss said, it's a homecoming to come back and see some of these pews. But I was here a bit later than she was, so things still look kind of the same for me. But one of the main things I wanted to share, and it's not really a presentation, but we're all hearing about the inflation, we're hearing the economy is tight. I just wanted to just send a cautionary note, or just a big sister advice to everybody seated here, that in times like this is when you really need to be careful with how you're spending, how you're budgeting. Make sure that you're not spending more than you're earning. Make sure that you're using tools at your disposal, whether it's an Excel spreadsheet to count your inflows and your outflows, or you're using a little notebook, or you're one of those that has the envelopes for, this is my tithe money, this is what I use for spending, this is what I use to do my hair, or to fix my car, it's really important to create a budget and then try to live within the budget. I'm sure if I ask how many of you have a budget now, can anybody who has a budget raise their hands? Who has a budget? Not very many hands are up. How many of you people actually track this budget weekly, monthly? Those that have it. How many times do you find yourself overspending? Right? And how many of you ever earn more than you expect? How often does that happen when you win the lottery or a big inheritance comes? Not very often, right? So with that in mind, this is the time for you to start practicing the habits of budgeting, keeping your finances in check, because the habits that you have now with how you spend your money are the same habits you're going to have when you get out into the world, right? And then somebody was asking about MTN, whether this is a good time to buy MTN or not. The answer is outside for you. So after this session, make sure you see one of us so that we give it to you. All the stocks that were traded, you see our flyers here. We have a couple of funds, Tesah Future Fund, Tesah Treasury Trust. We also do wealth management. So whatever you're interested in, definitely see one of our reps. But most importantly, try to budget what you have, try to stay on track. And then the textbook, it's real life. From here, that's what's going to happen. So if you're spending all your money not wisely, by the time you earn your national service paycheck, you're going to be spending it unwisely. By the time you get your salary, you're going to be spending it unwisely. So start to train yourself in those habits, and then I think you'll all be good to go. So make sure you see one of our reps outside. We have some gift items to give to people that will open accounts or just have a conversation with one of our financial advisors, and then we can set you on the right track. So thank you.
Thank you very much. So I have been cornered to keep my comments to myself, but I am happy that. Okay, so let's move to the next on the bill, which is presentation. FinSac. Oh, okay. FinSac. I am told you have a presentation. FinSac. I am told you have a presentation. So if you can come forward and do the presentation. Where are the reps? They are telling me that they want to appreciate the team that has made all of us proud. So it is not really a presentation, but an appreciation, whichever way the session.
Okay, so thank you all for coming for this program. We'd like to appreciate the quiz team that went for the Tertiary Business Sense Challenge. So we have, when I mention your name, kindly move forward so that we appreciate you. We have Derek Kofi Otu Arthur, a level 300 student offering BSc Banking and Finance. So we have Abna Inshira Dankwa Ochre, level 400 BA Finance and Mathematics student. Yeah, Finance and Mathematics. We have Jack Lord Amponsa, level 400 BSc Accounting. We have Bismarck Kojo Koba, level 400 BSc Accounting. And the last person is Bill Eko Bonzi, level 400 BSc Banking and Finance student. So I'll hand over the mic to Derek to speak to us.
Good morning, ladies and gentlemen. So this is the quiz team for the Tertiary Business Challenge that was held a month ago. And we tried our best and we were able to win the Southeast Zonal Championship. We beat all schools and we went on to the semi-finals, but due to circumstances beyond our control, we weren't able to. Yes. beyond our control, actually. So we weren't able to get to the grand finale, but hopefully we are preparing for the next year contest, and we can assure you with everything that we win the next year contest. Yes, for that we can assure you. Yeah, so I don't know if my colleagues have something to say, but we appreciate your effort throughout the publicity, those supporting us, cheering us up on social media, Facebook Live, and those that they went with us, the actual events. We really appreciate your effort. Your morale helped us a lot in making this a reality. We thank you all. Thank you very much.
Well, the rest of you, you don't have voices. Bismarck, you seem to have a lot of fans here. So, Bismarck, say something before. I think there's something coming from. Hey, Bismarck, yes.
Okay, I would like to thank the lecturers and the trainers who helped us in preparing for the whole competition. Please, let's show appreciation. Some of the trainers are actually here. We have Dan Uso Amponsa. Boache Dankwa.
I knew he had something to say. Please hold on. There's a message for you.
I'm really impressed at your performance, even though you didn't bring back the trophy. So here's a challenge from all of us at Tesah. If you bring the trophy home, 1,000 cedis in each of you's accounts for investment. So here's a challenge.
So I realize Prof is trying to lobby for the students. And Prof wants us to know that they are zonal champions. We are saying that we want them to go beyond the zonal. So if they do, any one of them would have 1,000 in their account. Apart from him. So we have more hope. So, Derek, we are hoping that next year you'd make the school proud, you and your team. So we are looking forward to you bringing the trophy. No political talks. All right. So thank you very much for coming around. I am believing that you have learned a lot. So we are hoping that with the other seminars that we'll be having, we will see your faces and it will not be just a one-time thing. Thank you very much. Enjoy your day, and we hope to see you another time.